Welcome to FT Markets. It has been a record year for the European high-yield corporate bond market, although there have been significant bumps along the road. Here to discuss this asset class with me is Suki Mann, Head of European Credit Strategy at UBS. Suki, our first chart shows that there's been record levels of issuance of European high-yield corporate bonds this year, even more than the previous year, which was itself a record. What has been driving this?
Quite simply, the search for yield. I give you zero for cash, you move into an alternative asset class. That alternative asset class for choice over the past couple of years indeed has been the corporate bond market. And the high yield bond market has obviously curried much favour as a result of that need for yield.
Our second chart shows that the first half of the year was very, very strong sales of high yield bonds, and the yield actually fell to 3.8% by June. Since then, there's been a couple of sell-offs, first in July, August, and then in October, when there was a more general nervousness in all markets about the economic outlook. So is this a resilient asset class, or is it a fragile one? Because there have both been these drops and then quite strong recoveries.
Yeah, it's too early to make the call whether it's resilient or fragile. I think, you know, the high yield market in Europe has had a few false starts over the past 15 years. You could argue it's probably still a fledgling asset class in one respect, because supply could drop off quite aggressively over, into any turbulent period that we have, like we have done. I think the weakness that we saw in the July to September period in particular was predicated in Europe on very low flows, or outflows rather, and very low flows as well, whereas in the US, we did see material outflows from the asset class. I think investors in Europe got a little bit nervous that they might see the same situation here, but we didn't. So it goes to show that we haven't quite decoupled from the technical drivers that might drive the US weaker or stronger.
Mm-hmm. Now, despite the overall high level, our third chart shows that most of the issuance was in the first half, and issuance levels have been fairly low since then. So what's your outlook for the sector now?
Well, certainly issuance is dependent on market sentiment, and we need market sentiment to hold fairly firm, be upbeat, to get the supply levels out. I think that we are probably going to hit periods through 2015 where we will see more volatility on the macro side. That volatility, if it feeds into this asset class, will close the market for periods like it has done over the past few weeks. And as a result, my expectation is that we will see lower supply next year versus this year. So whilst we're at a record level this year, I think next year we'll probably see 20% less in terms of euro-denominated high-yield corporate bond supply.
And what sort of returns do you think investors?
From a returns perspective, this year we're up at 5.5% year to date, which is actually quite respectable, given the volatility that we had and the sell-off that we've had. We've come back quite smartly over the last few weeks. I think for next year, assuming underlying yields behave themselves and don't jump higher, that we could probably get between 5.5% and 6%.
I see. Thank you, Suki. So, high yield bonds will continue to be an asset class that will interest investors going forward, although there could also be further uncertainties.